This is the second of two videos on ways to shield your hard-earned assets from legal action with Ekta Patel, Director of Financial Planning at Altfest Personal Wealth Management. Before we go into asset protection / shielding your hard-earned assets from legal action, we need to say that the information provided today is for educational purposes only and should not be taken as an advice for any physician's specific situation. Also, we're not lawyers, and so we're not giving any legal advice. As comprehensive wealth managers, however, we are able to identify potential issues in many areas of a physician's financial life, and we also work with the physician's other key professionals, such as accountants and attorneys, to make sure all financial areas are fully optimized. So Ekta, now let's go to asset titling as a potential method or strategy to protect against creditors. So first, you've mentioned something very important called tenants by the entirety.
Mm-hmm.
Now, what does that mean when it comes to asset titling?
Okay, so it's a type of asset titling, as you mentioned, and in some states in our country, if you are married, you are allowed to title assets such as real property, like homes, as tenants by entirety. And it's essentially a joint ownership available for married couples. And the way it works is that if you are married and own it jointly, one spouse's creditor cannot access the property because both the spouses have undivided interest in the property. So creditor of a spouse cannot really force you to penetrate the asset.
Interesting.
So that is a very, very powerful asset protection tool.
Excellent. So you're saying married couples would potentially want to do this because if you have one spouse that's, let's say, in a very litigious occupation like physicians,
yes,
and another spouse who maybe isn't, maybe let's say a professor, then by owning it jointly, like you said, they cannot pierce that titling in order to get stuff,
that asset out of it. It's a very simple and easy tool to take advantage of.
Excellent. And you said, though, not all states have this option, right?
Yes, no, not all the states have this option. So, for instance, New York and New Jersey allows you to for real properties to title as tenants by entirety, but for instance, Connecticut doesn't allow that. So, depending on the state you reside, you need to figure out whether your state allows such a titling or not.
Great. And so are there, because we always want to give the pros and the cons, so are there times when this titling of tenancy by the entirety, when it could fail, when it could lose its magic power to protect against creditors?
Oh, yes. There's always an exception to these rules, Mike. So in, let's say, the event of a divorce, if you're going through a divorce, the asset gets split, and then you're individual owner of that split asset. So now it becomes accessible to your creditor. The other is if both the spouses are being sued together.
Oh, together.
Together. Okay. If you're both sued together, then that asset is accessible to the creditor.
Right.
And I would say finally, if in the event of death of a non-debtor spouse. So if your spouse who's not in the lawsuit passes away, you own the asset. Remember, you're married and this is a joint ownership, right? So now all of a sudden you are the sole owner of the asset. So now that becomes accessible to the creditor. So this is where the tenants by entirety falls apart.
Thank you. But I think this tenancy by the entirety concept is going to be very useful for our physician audience. Changing the subject, let's move now to another type of strategy, which are the different types of legal entities that one can create in order to shield assets from lawsuits. One is called an LLC. Can you tell us, first of all, Ekta, what is an LLC?
Limited liability company, right? So physicians probably are familiar with this because they do form certain sort of a structure like an LLC or corporation when they're forming their business. Right? In order to avoid any malpractice related lawsuits as well, it helps that the business is in a certain structure that provides them the protection. You can do something similar with your personal assets as well. Yes. So you can, let's say, if you own real estate, and I keep coming to real estate because it's easy to explain. If you own a real estate or several real estate properties, you can put it in an LLC. And what it as an investment property, you can put it in an LLC, and what it does is that it provides you protection from external judgments like malpractice related cases, because they cannot touch the assets that are structured into an LLC, and from internal judgments, in the sense that if their lawsuit comes within the LLC, it cannot pierce out of the LLC to your own personal assets.
Okay.
So if you have a certain amount of wealth where you have investment interest in many areas, then you could consider putting them in an LLC format.
Okay, great. And you said real estate. Are there other types of assets that can go into an LLC?
In some states, you might be, again, this is very specific
Sure.
to
Very
states.
specific.
So, we're not giving legal advice here, but so be very careful of what your particular state allows. But in some states, some personal investments can go into certain type of LLC. But, you need to be very careful into how you place it and what the purpose of it is
Sure.
to put it in an LLC.
Now, this is all very complicated stuff, so we're just scratching the surface of
Yes.
it to bring it to people, physicians' attention, and then they can work with their attorney and their financial professionals to make sure that everything, the I's are dotted and the T's are crossed.
Absolutely.
Right. Moving to another type of entity, can you talk a little bit about a family limited partnership and how that works related to creditor protection?
Sure. Family limited partnership, FLP as we call it, it's essentially an estate planning tool with asset protection benefits. So if you're really considering a FLP, it probably is a better idea to think about it, whether it's a strategy you need for your estate planning, and then sort of think about asset protection. The way it works is you take an asset that you own.
Right.
It could be any asset, frankly, an illiquid asset, a liquid asset. You take an asset and put it in a structure called family limited partnership, and in exchange of that, you own shares of that family limited partnership. So that's really essentially how it works. This is an irrevocable gift that you're making into a family limited partnership, but you're getting shares of it. So you give up the ownership, but you control it
Via the share.
and that's the advantage, that you can still control the assets, but by being a majority owner using the shares.
Great. And are there any downsides to setting up a family limited partnership, or things that physicians should be aware of if they're considering it?
Certainly. As I said, this is primarily a very sophisticated estate planning tool with asset protection benefits. And because of that, it is also expensive to set up.
Right.
Quite expensive to set up. And also, there is an annual maintenance required for this.
Oh, interesting. Okay.
So you have to make sure that all your ducks are in a row annual basis. You file proper papers, etc. So it's not something that you do it once and then you put it aside. Make
Right.
sure that you're complying with all the rules and regulations that comes with forming an FLP.
Okay, that's very interesting. You're saying ongoing maintenance in order to make sure that it's staying up to code and
Yes.
staying all good for the protection that you're hoping it will give you.
Yes.
Excellent. And so, Ekta, physicians might have heard this concept also of an asset protection trust. Can you first start out by telling us what an asset protection trust is in general terms?
Sure. So, like an LLC or an FLP, it's also an advanced planning tool you can use for asset protection. What it is essentially is that it's an irrevocable trust.
Okay, irrevocable.
Irrevocable trust. So, if you want to put an asset in an irrevocable trust, you can't reverse that in most cases, right? So you have to be very sure that that's what you really want to do,
Right.
and you lose the control over it,
Okay.
right? So there will be a trustee appointed who will be managing that trust in your benefit if you're beneficiary of the asset protection. But the advantage of that is that your creditors cannot touch it at all. So it's an ultimate asset protection tool from that sense, because you don't own the asset, your creditors are not going to be able to get access to it.
Okay, but you're saying you can be the beneficiary.
Yes. Yes, so you can be the income beneficiary of that. And keep in mind that a trustee decides whether to make income distributions or not. They're not necessarily mandatory.
They're not required.
So if you don't really need the money, you don't need to take it out of it.
Right.
Because once you get
Take
anything out of it,
then the creditors come knocking.
After. Yes,
okay.
Exactly.
Very, very good. And is there anything else in terms of major pros or cons of the Asset Protection Trust that you'd want to make the physicians aware of today?
Yes. I mean, Asset Protection Trust can both be domestic, so can be done in U.S. There are also offshore international Asset Protection Trust, which gets extremely complicated to set up, and only do it if you really, really need it, because you're required to annually report to IRS. So this IRS reporting is mandatory. And again, like other structures, you have to maintain according to the code. You have to disclose the assets that are in the Asset Protection Trust. So there are several requirements legally to continue holding such trusts on regular basis. So there's a cost that comes with it. So it can get very expensive to create this trusts.
Thank you. Well, Ekta, I think today you've given our physician audience a great deal to think about, some tools, some techniques, some strategies on how to protect and safeguard the assets that they've been working so hard to earn over their career from lawsuits, litigation, legal action. So thank you so much for coming on the show. It's really been great.
Thank you, Mike. My pleasure.
If you'd like to discuss the information explained in today's video, receive a complimentary analysis of your investing portfolio or retirement readiness, or discuss any of your other personal financial planning areas with an Altfest professional at no obligation, please contact my colleague Jesse Freeling at 212-796-8732 or by emailing Jesse at his email address, which is also in the description of today's video below. If you like today's video about providing insights to help physicians optimize their personal finances and achieve financial independence, please click the subscribe button and hit the bell icon below to receive notifications each time we release a new video. If you think that a fellow physician would find this video interesting or useful, please feel free to share it with him or her to help them get their finances optimized too. Lastly, as always, this channel is for you. We want to make this as interesting and as useful and as enjoyable as possible. If you have any topics you'd like us to cover, have any questions for us, or dislike certain things that we're doing, we want to hear it. So please give this and any other feedback in the comments section below. Thank you very much. Well, that's all for today, physicians. I look forward to being with you again in our next video. And until then, be well and remember to keep on optimizing your finances, or ask us for help if you'd like.